Well, hello, it's Simon Gray from Real Tail Trader, and just in the office this morning, up at 6 o'clock UK time, done all my daily market analysis. The trades are on, positions are in, so I've got a bit of downtime now where I thought I'd record a quick video on why most traders lose money. Now, this is something you see out there all the time. It's in the blogs, it's on the forums or whatever else. And the statistic is, 95% of retail traders, that's people like me trading from home, lose money or similar. Who knows what the number is? Who really cares what the number is? And if that's true, it's not necessarily true. A lot of people do lose money, and they lose money for three principal reasons. And I've been trading now for about 7 years, made a load of mistakes in the past. I'm now in a position where I'm consistently profitable, using a strategy very personal to me. I'll talk about that in a moment. But I want to talk about the three reasons why people lose money in the markets. And that's whether you're trading stocks, currencies as I do. I specialize in currencies, futures, cryptos, whatever it might be. There are three principal reasons. And the first reason is that people are looking for the Holy Grail of trading. So number one, people think there's the magic answer. There's the magic thing out there, the Holy Grail, sometimes people call it, that is the system that's going to work and it's going to be consistently profitable. Now, any system that you develop, any system that you take off the shelf and try and modify for your own purposes, what I can tell you is it's going to give you losing trades. Every trader loses, and trading is not about certainty, it's about probability. So it's about making sure that when you do win, that you win bigger than when you lose. And ideally, you want a winning 50-50. If you win 50% of the time and you're taking home 2 for every 1 you lose, then you've got a very profitable system, but you're not going to win all of the time. But people believe, and the marketing out there that's on the internet is that yes, there's a winning system. My system's better than anybody else's, and I'm not saying mine is, by the way, but this is what people say. And people buy into this, and they'll do a system for a little while. When they get a couple of losses in a row, they'll ditch that system and they'll go and look for something else. So they never really get to understand the probabilities of any system that they're trading. This is a massive mistake. When I started out, I did that. I would do this kind of system. I trade that for a little while. I get a couple of losses. I think, well, it doesn't work, and I go and do something else, and or find something else. Did all the technical analysis study and this, that, and the other. If I just knew that one technical indicator a little bit better, I thought I'd make more money, and it was all absolute nonsense, because technical analysis, which is my style of trading, but my style of trading, technical analysis, is very, very simple. All this wedges, triangles, whatever it might be, double tops, don't really bother with any of that. I have a very, very simple system. Keep it simple and be profitable. As Leonardo da Vinci said, simplicity is the ultimate sophistication, and I wholeheartedly agree with that. So the first mistake is there is no 100% winning system. Forget it. It's not out there. The second reason, I should say, that people lose money in the markets, in my experience, is that they trade too big. So they come into the market and they want to replicate their salary. They want to maybe ditch the job. They want to replicate their salary. They've got a small account, so they're trading too big. So let's say they've got a £5,000 account and they are trading £1,000 per position. They've only got to be wrong 5 times and they bust their account. And they're wrong a couple of times, they're nearly down to 50% of their original capital. You don't know what order, going back to my probability point, you don't know what order your wins are going to come in. And if you're right 50% of the time or more, ideally, then you could be wrong for a stretch. Doesn't mean your system's bad. It just means that the order that your winning trades come in, it's not uniform. So you don't know what that order is. So I've seen this, from myself, my own experience. I would trade too big. It will put a lot of pressure on me emotionally. What that does, it means that you do stupid, or you can do stupid stuff like trying to stay in a trade longer than you should. And when you do have a winning position, because you're so scared of losing the profit, you tend to cut your profits short, which is completely the wrong way around. You want to cut your losses quickly and let your profits run. So my advice is, if you are trading or starting out, is to trade small. And what I do with my account, I trade on any individual position. anywhere between 0.5% and 1% of my account balance. And once I have a profitable trade in that particular position, I'll then add again and add again. So my risk on any position is anywhere between 0.5% and 1% of my trading capital. I then also look at something I call correlation risk. So I trade currencies. So if I'm buying the cable, the pound against the US dollar, or the euro against the US dollar, effectively I've got the kind of the same trade because they're both selling the US dollar and buying European currencies. So I would only have two of those in my portfolio at any one point in time. So if an opportunity presents itself, which was me selling the dollar again, USD, Japanese yen, let's say, the yen, then I'm not necessarily going to take that trade unless my other position is protected fully, because I've got too much exposure to the US dollar. You know, risk management is very important. Don't trade too big. And risk management for me is only trading a small percentage of your capital, and your priority is to protect your capital at all times, and also thinking about this thing I call correlation risk. I'll tell you a little story. When the reason I got into trading was about 8 years ago, and I went to a seminar in London. And it was a success seminar. There was lots of different people on the stage, and this one guy that got up, I'm not going to mention any names, he was a trader. He put on this video of him doing this, that, and the other, driving the fast cars and all this kind of stuff, and did a live trade. It wasn't live, but it was a recording of him making something like £30,000 in 10 minutes. And everybody in the audience thought, wow, that's amazing. Imagine if you could make £30,000 in 10 minutes. There was an opportunity then to sign up at the back of the hall for this course. I signed up for that course, and I went and did that course. I'll talk about that in a moment. But what I didn't realise at the time, because I was new to trading, is that if you're going to make that kind of money in 10 minutes or whatever, you're going to need about £1 million account, and not many people have got £1 million account that they're trading. So it was kind of a message to the audience to get people interested, but it wasn't the reality of what trading is. I imagine that most people in that audience did not have £1 million account, and even if they had £1 million in the bank, they're probably not going to throw that into the market straight away until they've got some experience. So it was kind of what's the word I'm looking for? It was not exactly the truth, let's say. And then I went on this course, to come back to the course, a couple of days course down in London, and what I really learned was somebody else's system, which didn't actually work for me. I ditched that. I'll talk about how I got to where I got to, where I am now in a moment. But that brings me on to the third reason why people lose money in the markets, and that's because they don't have an edge. And what is an edge? Well, an edge is your system. Your way of approaching the market, your way of identifying what an opportunity is, when to enter, when to exit, what to do if this happens, to cover all eventualities really. It also covers your risk management, etc., etc., how much you're going to put on each position, when you're going to get in, when you're going to get out. And your edge will have a probability attached to it, and that probability will come to light over a period of time. You make 100 trades, let's say you win 50 of them, well, you have a 50% probability in that particular system, and then what you're looking to do over time is to fine tune. But you don't ditch the system if you get a couple of losing trades. You trade 100 trades and see what that probability is. The other thing about your edge, it has to be personal to you, and you'll hear stuff and read stuff where people say, well, yeah, trading has to be personal. It's got to fit your personality. Well, what does that mean? I think I'm quite a nice guy, quite a friendly guy. Does that mean I need a friendly system? Is that what it's all about? No, it's not. What it is about is the fact that your trading personality and your need for your need to get paid, or your need for activity in the market, what is that? So I've done things in the past where I traded once every week. That was very frustrating. I needed more action from the market. I've done day trading. But that was too much action. It didn't fit with my timetable for life. It didn't fit with what I wanted to do outside of trading. So now I trade a 4-hour time frame, which means I do my work in the morning between about 6 a.m. and 8:30 a.m. That's preparation for the day, and then I check my positions every 4 hours, 10 o'clock, 2 o'clock, 6 o'clock, and sometimes 10 p.m. if I'm still up by then. Usually I'm quite tired because I've got up so early, and that fits my personality. It's not too fast, it's not too slow. I'm holding positions on those time frames from anywhere between 2 or 3 days to about 2 weeks. So it just balances my need to get paid from the market. It's not too fast. I don't need to get paid every day, but I don't want to wait, 3-4 months. I'm not a long-term investor. That doesn't work for me. So that fits my personality. The problem I had when I went to London and did this course, I was taking somebody else's system. It was their system, not mine. It didn't fit with my personality. It didn't fit with my understanding of the market. It didn't really teach me to understand how the market works. And I was kind of left just doing something because somebody had told me to do it without a deep understanding as to why I was doing it. So another reason that I lost money in the past. The big turning point for me, so got the 3 things there. What was the big turning point? Well, the big turning point for me is when I sought out an expert, somebody that wasn't trying to sell me this, that, and the other, somebody that wasn't on these big stages down in London or wherever trying to sell this course, this system that's going to make you financially free. All of that, most of that is nonsense, I believe. But I found a guy in the States, based in Chicago, who'd been a former pit trader. I approached him, he didn't approach me, and I asked him to teach me what he knew about the markets. And I spent some time with him. And what's really interesting, and it was slightly frustrating at the time, but now I understand why, that course was not about a trading system. It was not about a trading approach. What that course of sessions I did with him was all about psychology. It was all about what goes on in here and how to manage these 2 emotions of fear and greed. Because you may have heard things that everybody gets what they want from the markets. It's in one of the many books that I've read, and it's absolutely true, because the market does its thing, and I have total control about what I choose to do. But with the emotions that come with trading, because money's at stake, particularly if you're trading too big, which goes back to my second point, then you can get into real trouble. So this teaching, this education really focused me to think about not what the market's doing, so not learning all these technical indicators, which most of them, to be honest, are not worth looking at, but to think about the psychology of the market. And the psychology of the market is what goes on inside my head when I'm trading. Do I really understand what my inherent beliefs about the market are, how I'm thinking, and how that's impacting how I act? So I do a series of exercises to make sure that I really know what's going on inside here, and if I'm potentially self-sabotaging or doing something that could be a detriment to my account. And then the other element of psychology is when you look at a chart, when you think about the market, what's it all about? Well, really, it's about the psychology of other people, because the prints on a chart, they're somebody else's actions, and somebody's buying, somebody's selling. Okay, when are the buyers going to get scared? When are the buyers going to think, well, actually, now's the time to take profit? If you're selling, when are you going to think when do you think the buyers are going to come in? When is the price going to be at such a level that buyers will enter the market? And if you're a short seller, you're going to come under some pressure. Who's fearful in the market? Who's the person losing? Who's the person having their stop losses potentially run? Because that's how the market moves. It's people usually getting out of unprofitable positions, losing positions. That's the fastest urge to action in the market. If you have a profit, you're going to hold that profit. You're comfortable holding that profit. It's quite a nice position to be in, a very nice position to be in, particularly if you've rolled your stop loss to break even or better. But if you're in a losing position, you're fearful, and fear is the biggest motivator, and you're going to be getting out of that position, or maybe forced out of that position in what's called a stop loss run. And most of the activity in the market, most of the movement in the market is caused by people getting out of losing positions. And that was one of the big insights I got from my time with this guy in the States. And one of the big things that changed my whole perspective of the market and how to look at the market. The market is very simple. It's either going up, down, or sideways. What's very complicated is what goes on inside here, and that's really the thing to master in terms of trading. So my whole setup now, my whole approach to trading, it's less about the market and it's more about what I'm doing, what I believe, what I think, and how ultimately that makes me act. What my emotional state is, etc., etc., etc. And if you can regulate that and understand the probabilities of an edge, which I have written down and I look at every day, then you have a chance to be a profitable trader. But for the 3 reasons I outlined earlier in this video, that can be very, very difficult indeed. So I just thought I'd get this video out there. It was just on my mind. Did my market analysis this morning, jumped in the shower, and as often happens, I get some ideas of things I want to talk about. So I thought I'd get on camera and just shoot that out. So if you think that was useful, please leave me a comment. Please hit the subscribe and the notification button. I put one of these videos out usually once every day, once every couple of days. I've also just jumped onto eToro, that's E-T-O-R-O. Set up a profile there. My profile there is Simon G Forex, so I'm trading some positions through that platform if you want to check that out. But I hope you found this video useful, and trade safe, and I'll talk to you soon.